Okay, so I think most of you are getting this. I wanted to show you this on MyLab because it's a little weird. And even on the Excel sheet, it's a little weird of how they formatted it. So let's just do the first couple together. So it's asking me on December 1st, what transaction happened? It was this $30,000 cash. And then we saw that is in this contributed capital, 30,000. Okay. And for those of you who haven't started using MyLab, like this is like I guess a good little intro of how it works. So I'm gonna check the answer. If I did not get it right, I have two more tries to change whatever my input was to get it right. So you have 3 tries per like click of that check answer thing. Okay. So that's kind of how it works. So like it gives you a little bit of grace to figure out what the right answer is. No, it just puts what the right answer is, and then it moves you to the next part. Yeah. Okay. Um, so now it's not asking for the balances yet because we just did one transaction, right? So whatever the balances are from that one transaction, that's like balance. Okay. So and we can see it's balanced. The assets, which are the cash, accounts receivable, and supplies, 30,000 is equal to common stock, which is on the right side. Okay. So next. Um, Received 4,000 cash. That's one account from customers for services performed. So these two words I need to clue into and realize that what it's saying is that this is revenue. Okay, service revenue. I've done something and I've earned money for it and they're paying me in cash. Okay, so my cash balance is going to go up 4,000 and my service revenue is going up 4,000. Okay, so I don't have to put, it's the next line where I put the balances for everything. Okay. This line for December 2nd is just this one transaction. What happened? What accounts were involved? Now I'm going to put the balance because I had the 30,000 in cash from before plus this new 4,000 from this transaction. So my total is 34,000. And this is the weird thing. Everyone pay attention, okay? Because you're going to maybe get this wrong. It's like so unobvious. So that's why I'm doing it on MyLab. You have to put zeros for all this other stuff. Okay. This is 30,000. Okay. So you don't have to put zeros here on the December 2nd line for the transaction. But when you put the balances, you have to put zeros for everything that has a zero balance. Is everyone clear on that? Okay. Okay. So next transaction, I paid $100 cash. So look, this is like good SAT, like reading comprehension kind of test here. You have to read this stuff and it's telling you exactly what accounts are involved. Okay. I paid $100 cash for supplies. So there's two accounts that are like explicitly mentioned here, cash and supplies. And it's giving you the amount, $100. So what is happening is that my supplies, this is increasing. I'm getting $100 of supplies and I'm paying $100. So you have to put a negative sign, okay? In chapter 2, we're going to start learning about debits and credits. You'll never see a negative sign again, okay? But until we get there, we're going to just use negative signs, okay? Because it gets too confusing with negatives and positives. We have this system of debits and credits, which we're going to introduce next chapter, that's going to solve this ambiguity, okay? But for now, for this problem, we're going to use negative signs. So this is going to be 33,900 is the balance of cash. We now have a balance for supplies. All the rest of this is the same. And you can still see that the equation is balanced, right? We have total assets, 34,000, right? This 33,900 of cash plus $100 of supplies. And then on the right side of the equation, we also have 34,000. This revenue 4,000 and the common stock 4,000. Okay, December 9th. I'll do one more and you guys can keep working. Perform services for a customer and bill the customer for services rendered 3,000. Okay, so um, again, that's going to be a revenue. We performed services 3,000. They're not paying us yet, so it's not cash. What is the account that's going to increase from this? On receivables. Okay, so we have this account receivable. It's going up 3,000. So now when I do the balances, oh, something's missing. Okay, so now you can kind of see what happens when you get something wrong. So it's not telling me exactly what I got wrong. So anyone see it? I see it now. Yeah, exactly. Okay, so there was an existing balance in service revenue. This should be 7,000. Okay, so it's a little, look, I'm in past semesters, what it would do when you check the answers, it would lock in everything you got right and only leave what was wrong open. Okay, so this is a little harder because it left everything open. It wasn't clear what was wrong. So you will have to be a little detail oriented and understand, go through everything, figure out what you did wrong. So it's a little harder. Made the settings a little more challenging. Okay, so keep going. I'll give you guys time now to work. Keep working. Okay, so the next transaction, I think this is a couple are throwing people off a little bit. Okay, so you receive an invoice from PG&E, your utility provider, for 200 bucks. That means your company has used utilities worth $200 and the bill has come due. Okay, but you're not gonna write the check and subtract cash, right? So if you've used this electricity but you're not paid it off, you've technically borrowed $200, right? PG&E gave you $200 worth of electricity and you now owe them that money. So what do we call it when you owe someone something? It's a liability, right? So we're gonna have the only liability they really list is accounts payable. Okay, so it could have been utilities payable. We could have called it something else, but it's essentially a liability. We have to conceptually understand here that we borrowed $200, right? PG&E gave us $200 worth of stuff, and we owe them for that. Okay, so this liability is going to go up 200. Utility expense is going to also go up technically 200. Now, how does this keep our equation balanced? Okay, so let's just see how that works. So the balances on the asset side are the same, unchanged. So we still have, what is this? 37,000 on the left-hand side. So 33,900 plus 100 is 34,000 plus 3,000. So 37,000 on the left side. On the right side, we have 200 for now our accounts payable, 30,000 of common stock, 0. We have revenue, 7,000 minus 200. Okay, so let's just make sure the math is working here. Okay, so I have 200 plus 30,000 plus 7,000 minus 200. So you can just do it. I don't have to use Excel. This $200 account payable minus this utility expense, they kind of cancel out, and we have 37,000 on the right-hand side. So our accounting equation is balanced. Assets equals liabilities plus equity. Well, I'm just saying, like, you can add this up. 200 plus 30,000 minus 0 plus 7,000 minus 0 minus 200 minus 0 minus 0 is 37,000. Yeah, but yeah, I mean, you're not necessarily doing this in Excel though. This is like in the format of this, this software. Yeah. But if you were to do it, you would do 200 plus 30,000 plus 7,000 minus 200. You would just have to, you do the calculation like this in Excel. Yeah. Okay. Okay. So does everyone understand? Really, the point of this whole exercise is to make sure you're convinced that the accounting equation is balanced at every point. Okay, so right now it's at 37,000 on both sides. Okay, the next one on the 15th, paid for advertising on social media, 125. When it says paid for, that is going to imply cash. Okay, it won't say it explicitly all the time, but you can assume that unless it says paid for on account or promise to pay or something, if it says paid for, you can assume that that means you paid for it with cash like right away. Okay, so your cash balance is going to go down $125. In this case, I have to put a negative. Okay, again, I will repeat it. In the next chapter, we're going to learn about debits and credits. We will not use these positive and negative signs anymore. Okay, because it is confusing, as you're saying. This system is not elegant. Debits and credits is a very elegant system that will get around this problem. Okay, and then we also have advertising expense of 125. This is already a negative, okay? So we don't have to put a negative here. This is why it's confusing, I know. Okay, so our balance here is going to be 33,775. Is that right? Someone can check my math? Okay, so if we did this math, 3,375,775 plus 3,000 plus 100, is that going to equal all this stuff added together? It will. Okay, you can do it. You can prove it to yourself if you want. But again, the accounting equation is still balanced. What we essentially had was the asset. What happened essentially is that my asset, cash asset went down. Okay, equals liability is unchanged. My equity also went down because I had an expense. So both went down by 125. Okay, that's what kept this in balance. So I'm kind of like just erasing the noise and showing you essentially what happened to our equation on a kind of high level. Okay, so again, the point of this is to really prove that the accounting equation is always balanced. Okay, December 20th, you paid the utility invoice from December 10th. So a lot of times we're going to see some transaction related to a past transaction. Okay, so you have to go back and see what happened on December 10th. We received this invoice from PG&E, and we had created an account payable. Now we're going to get rid of that account payable and pay them off. So we see that our account payable balance is 200. This is going to go to zero. I know the balance is going to go to zero because we're going to pay it off. How do we get it to go to zero? This is negative 200. Our cash is going to go down 200. So we have 33,575, 3,000, 1,100. This is zero. Everything else is kind of unchanged. One key confusion is that you've already taken the expense for this. The utility expense was taken on December 10th. This is now just clearing out that payable, okay? So you're not going to have to reintroduce that expense of 200. You already did that when you first got the bill, okay? So this $200 is still $200. That's all you spent on utilities. It's just that you didn't pay it off right away. Okay, collected cash in full from customer billed on December 9th. So what happened on December 9th? We had this account receivable that was created, right? If we look back, December 9th, we had this $3,000 account receivable. We recorded the revenue because that's when we actually earned it, right? So again, the same thing. We're not going to re-record that revenue. This is just a matter of converting one asset, account receivable, to cash. We're not going to recognize any new revenue because we already did that. We've already accounted for that revenue that we provided, that service that we provided. So now it's just a matter of basically this account receivable is going to go to zero because this customer is paying us off. and we're going to increase our cash by the same amount because they've basically given us the cash. They no longer owe us any money. So our asset total is going to go unchanged. Okay, so what happened there? We had assets equals liability plus equity. Nothing happened here on the right side. We just had one asset go down and one asset go up by the exact same amount. That's why our equation is still balanced. Again, when we see paid for, it's going to imply cash, okay? Paid for with cash. It's not saying it explicitly, but you can, as you get used to how uh, the textbook kind of words problems, I'll give you the kind of 411 that paid for means paid for with cash. Okay, so we're going to pay our assistant wages, $1,050. So our cash is going to go up or down. Oh yeah, but that's you can have a thousand transactions on the same day, you know. So yeah, you're right. I skipped one. So on the 20th, let's do the rent. This first one, okay? Um, so cash is going to go up or down in this? Down, right? So negative 1,500. Yeah, thanks for pointing that out, though. Yeah, you're right. Um, we would have gotten this wrong. I would have been confused. Okay, so we paid rent 1,500, so our cash will go down. What's the second account that's involved? Rent expense, right? Right here. And again, you're going to make this a positive number because it's subtracted here. So, okay, so what is the balance here? It's 35,075. Okay, so now the second transaction on the 28th it's the same thing essentially. We paid just it's just going to be a different expense, right? It's the same conceptual transaction where we're paying cash for an expense, but it's just a different expense. It's salary expense. So we're going to do another negative 1,050 in cash. And what is it called here? Salaries expense right here, this one. Okay. Received. Okay, so received cash. So our cash is going to go up. I already know half the transaction now, or half of what we're going to do from customers for services performed. So I know that cash is going to go up 2,800. So what is it from? It's not we got a bank loan. It's not from, you know, selling some asset. It's from a revenue. We did something for a customer and we earned money. We earned that 2,800. So this is a service revenue of 2,800. Okay, so this is going to be 36,825. And this is 9,800. And then last one, cash dividend of 2,000 were paid to stockholders. Okay, so our dividend amount is going to go up 2,000 because we now have a dividend that we're paid. What is the other account? It's the first word on here. What do we pay? Cash. So is cash going to go up or down from this? Down, right? You're taking cash from your company's bank account and you're writing a check to all your shareholders and giving them that money. So the bank account balance for your company is going to go down from this. Okay, so we're going to do negative 2,000. So now we're at 34,825. Okay, so this already has a negative, so I'm just going to put 2,000. And then all the rest of the stuff is Okay, so that's it. So let's just make sure this all balances. Okay, so let's see if I can do a little copy paste here. Okay, so on this, these are my assets here. Okay, asset, asset, asset. So my total assets is 100 plus this. Okay, so on the right side, let's see what we have. We have our common stock. I think this is minus the dividends plus the revenue minus all these expense accounts. Okay, and it balances magic. Okay, so through all that drama, all those transactions for the whole month, our at every point in time, our equation is balanced, and at the end, we see that it is balanced. Okay, it's a split between all those accounts now because we had all those different transactions happen. Okay, so is everyone a believer in assets equals liabilities plus equity? That's the goal of today, is to make you all believers. Yes? Okay, and this is like, it's not an obvious thing, okay? It's quite powerful, okay? And we're going to see how it also relates to how we're going to set up our financial statement.